So the story we need to watch is the Fed. The story we need to watch are bond yields.
Yeah.
And where you sort of you seeing 3 hikes from the Fed in the near future?
Probably. I mean, we're going to come on to it in a minute, but the next big
Yeah.
calendar date everybody needs to watch out for is the Federal Markets Committee, which is opening FOMC, which is on, I think it's on Tuesday and Wednesday, March the 20th and 21st.
Yeah.
Check my notes there.
Yeah.
And I think, that's almost certain. Well, let's not say that because you can't say almost certain. It's highly likely they'll increase interest rates. And I wouldn't be surprised to see interest rates at the top of the cycle over the next sort of 12 to 18 months in America go to 2.75%.
Yeah.
That feels about right. And that would imply that 10-year US Treasury yields would probably go past 3.5. And that is usually a pretty strong leading indicator for a bit of increase in stock market volatility.
Yeah. Of course, there are still a lot of cheap money going. There's still QE in Europe. There's still QE in Japan.
Yeah. Interestingly enough, though, I track a research organisation called Cross Border, and they do a lot of work on central bank liquidity flows. They're very good on it, and very interesting. They've spotted very significant tightening in the US Fed and the ECB. They've noticed their open market monetary operations are tightening in, and have been tightening for the last few months.
What QT you're talking about?
Yeah, the whole range of quantitative operations in the markets. They've been scaling back. The Fed most aggressively, but actually they've been noticing a pickup in the scaling back of the ECB. Interesting enough,
that's very interesting.
Yeah. And of course, it's logical because, of course, what Europeans are terrified of is the strengthening euro. Because the dollar's, and we'll come back to that again, the dollar is weakening.
It gets back to trade.
Absolutely. And therefore, what they're terrified is they keep pumping liquidity into the system and they've got a strengthening euro. They've got a real problem on their hands, basically.
Yeah.
Interestingly, according to Cross Border Capital, the one central bank that is still pumping loads of money into the economy is the Bank of England. So they are not tightening by anywhere near as much.
Well, there's
as
no
the Americans.
QT in UK then. They're just letting it they're using the coupon to.
Yeah, and they're still pumping money out into the markets, quite aggressively.
Yeah,
and interestingly, I didn't realise. I thought it'd be the reverse, but actually the data suggests the opposite. So the Bank of England being the most dovish of all of them.
Which, of course, reflects Brexit.
Absolutely. There's lots of good reasons why that's going on.
God, we need cheering up.
Yes, exactly. So that's what's going on. So look, the big takeaways I would say is I'm not as worried about inflation spiralling out as lots of other people are. I think inflation will go up, of course it will.
Yeah.
But I don't think it's going to suddenly hit 5-6%.
Yeah.
I would suspect that interest rates might get up to 2.75, 2.5 in America. We expect Treasury yields to go up. That will increase volatility in the stock market, and I think you'll see a lot of different asset classes, energy, commodities, all moving around in a different way, and FX particularly.
So if you're looking to sort of track a particular part of the economy, you look at the commodities area to be, well, you have to keep varying your position, wouldn't you?
Yeah,
because prices will go up and down.
Yeah, I mean, if you've got
it's not straightforward.
That's my point. And if you look at the FOMC meeting that's coming up, I said in a couple of weeks' time, probably a sensible way of looking at it is that we might see an increase in volatility surrounding that meeting.
Yeah.
I think the stock market won't be surprised by an increase, so I don't think the stock market will tank. But I think actually the market to watch out for, and we'll come back to it, is the dollar, and the dollar against the yen, and the dollar against the euro.
Why don't we talk about the dollar?
Yeah. Well, the dollar's interesting.